Well, with everything rallying off of the earlier lackadaisical open, let's turn to Robin Cross of StoneX in Chicago and talk about a market that's never boring. It's the lumber trade. We have Robin on the line right now. Robin, what's going on this morning with the lumber?
Good morning, Marlon. Thank you, as always, for having me. It's, the highlight of my week. So right now we got November. Let's go through some prices. November's sitting at $625, down $5 with 48 trades. That's more than typical, I feel like, when we're on the air. January right now is $690, down $10. And let me just take you back. A couple weeks ago, we were talking, every customer, mill, wholesaler, dealer, you name it, was calling me, voicing concern. Hey, Rob, the cash market's only trading 600 or 580 at the time. How come futures are sitting up? I think we had a high of around $780. How come futures are this disconnected? And I go through this. I've been going through this continuously for my entire career, and I think guys really miss the boat on this one. When they look at the market, they ask themselves, what am I missing? Why am I not seeing the market up here? The fact of the matter is they're not missing anything. What they're missing is a great trade, right? So we're at $200 premium. I looked back at 38 years, which comes out to 220 expirations, and only found 2 instances with both tied to major news where the market did not converge. So if you would have hedged the futures against your cash, you'd be sitting pretty, because as of this morning, we had a complete and utter full basis convergence. So we went from a plus 200, we were actually a 30-cent discount. So, just when you doubt yourself and you don't think the futures are going to do what they're supposed to do by design, they always do, right? Unless we had, like I said, some major news. But, now we got to kind of flip the script a little bit. We look for this big basis trade. So number one, guys should be taking profit on those basis trades and applying it to their lumber, and they'll have the cheapest lumber in town. Number two, because we have not been a discount since, no joke, September 13th or 12th, somewhere right around there, that I think guys who have some needs going forward could start to look and pick up the pieces through the board, either buying some calls just to hold it, a cheap alternative, or just outright covering some of their stuff in the futures. Because I do expect January lumber to rally. It's going to take some time, and we got to get through the kind of Christmas doldrums, but I do expect January lumber to continue with this inflation of all other markets we're seeing. Why would lumber be the exception? And I don't believe it will be. And then I had a couple things to talk about. So, we have upcoming expiration, no goes, no limits as of Monday. But there was also a major change. A lot of reason we had this low open interest is because our daily ranges have been so massive, right? Typical right now it's sitting at 42. And then if you go limit up or limit down, which is very common, 63 is your next day prices. So now we have adjusted those limits. So as of Monday, your normal daily limit's going to go from 42 down to 30, and your expanded's going to go from 63 down to 42. So I think naturally that will bring some new outside money into the market, and it should improve open interest. Open interest is still a dismal 1,800 right now, all months combined. And if you remember, when we were at the high, it was like 2,500. So we took a good 600 cars out of this market in the last 2 weeks, which is kind of typical for going into expiration, but it's more so obvious in here because you really feel the impact of those couple hundred cars being gone due to the thin outright market. So I just want everybody to be aware of that, because I think that's really going to change things, and it's really should smooth out the market. I don't know if we're going to have these wild gyrations. That's actually a tradable range. And also it's going to lower the margins by design too, because, less risk, less money have to put out, so less margin calls need to be made.
Well, that's an excellent point.
I'd say that's what we're looking at, good buddy.
Yeah, I'm glad you brought that up, because that does make a tremendous difference in your trading strategies out there. So yeah, excellent stuff. We'll be keeping an eye out for that, and keep us posted on that when the changes all take place. Robin, thanks so much. I appreciate it. Robin Cross of StoneX. He's located in Chicago. I'll come back in just a moment. I'll get you updated on livestock trade right after this.